Welcome to Philly Fortune Talks with your host, Jake Penny, where the city's brightest minds share the secrets behind their success. Are you ready to be inspired?
Get ready to learn how to unlock financial freedom through smart investments. In this episode, we sit down with Chutima Barrios, an experienced entrepreneur with over 15 years of experience in both domestic and international investments. From overseeing $500 million in private equity funds to building her own $5 million multifamily real estate portfolio, Chutima has mastered the art of identifying opportunities and managing risk. Today, she shares the journey and offers valuable insights on how busy professionals can build wealth and achieve their financial goals through multifamily investments. Don't miss this chance to learn from one of the best. Chutima, it's a pleasure to have you on Philly Fortune Talks.
Yeah, my pleasure to be here as well.
So, with over 15 years of experience in both domestic and international investments, can you share, what initially sparked your passion for real estate and multifamily?
Yeah, so I like real estate investments concept long time ago since I was young because I was looking into financial freedom. So I read this book, Rich Dad Poor Dad book, and
Nice.
apparently it's just like a global one of the best-selling book globally. And so I like the concept of the passive investments, but I haven't done real estate investment until I came to the US. My short-term spark to do real estate investments was to get cash flow.
Hmm.
So I graduated from MBA. I had student loan. I have my 6 digit income, but my bank account has only thousands of dollars left because I have to pay down the student loans. And then just a year after I was pregnant, now I had this medical bill from giving birth, take my daughter to see the doctor or the checkups. So all the expenses keep growing. So I look for additional cash flow to support all these short-term needs. And then, so after my husband and I started doing real estate investments, we benefits from not just the cash flow, but we also realized this passive income concept because after we do the work in the beginning, it's not coming just from day one. We did some work in the beginning, right? But then after that work is done, you can really pretty much sit back, relax, kind of, because we are the landlord, so we still monitor and work with the tenants. But yeah, during 30 days, tenants paid us, right? And we have cash flow and we have time to spend with our children. So it's both cash flow, financials, benefits, and then time to spend with your loved one.
Yeah, it's awesome that real estate gives you, it's like the investment vehicle that gives you cash flow and time freedom as well. And, gives you time to spend more time with your family, which is like the mission in life is to be able to do what you want, when you want, with whoever you want, without having to look at, a price tag. Um, the five pillars of wealth, health, wealth, love, family, contribution. And real estate helps you do all those things.
Yeah, exactly.
So you've overseen $500 million in private equity. You built your own multifamily portfolio. What does your experiences complement each other in your approach to investments? You looked at 200 plus transaction, underwrote a ton of deals. You have a ton of experience in that. So what does that look like on your end?
Yes, but the private equity side is more on the businesses, right? So what the fund did was evaluating private companies, opportunities. So the way the drivers are different, in businesses terms, we don't look at NOI, but we look at EBITDA, right? But essentially it's the same. So for real estate or businesses, we try to look for bottom line return to investors, right? And mainly understanding how Excel spreadsheet work, right? We can build a good Excel format that allow us to do detailed underwriting as opposed to just high level putting in year one annual revenue that the broker sent to you and then subtract all the expenses and get to the NOI. So I was able to break down the rent or how we will increase the rent, and mainly if we were to do renovations, right? So I can break down how many units we will renovate and how are we going to ramp up the rent increase in each month or year, right? So that's more detailed than just like saying, oh, year one, we're going to increase revenue by 20% because we're going to complete the renovation in 12 months. And that depends on the deal size. If you're doing small deal size, that's possible. But when you're looking at like 100, 200 units to do renovations in complete renovation in a year, that's really unrealistic.
Yeah, that's a lot of units to be able to turn 1 year.
Yeah.
Geez, that's I haven't even touched that in 8 years yet, renovating 200 units. But what is so you said you increase the value of a property through increasing rents, value add through renovations, billing back tenants, utilities, things of that nature. How much like wealth does that add to you if you like raise the rents, say $20 a unit over, say 100 unit complex. I mean, it's a lot of net worth that gets added to the bottom line, right?
Yeah, so in real estate evaluation, you would look at the net operating income, which come from the rent, right? It is the difference between rental income and expenses. And most of the real estate expenses are relatively fixed,
Hmm.
right? Because yeah, like property taxes, insurance, well, it increases over year. But let's say in 1 year, if you can increase rent by, you said 20 units, I mean $20 per for 100 units, right? So that 2,000 and then times 12 for 12 months, right? So that 24 thousand. And let's say you will increase you have to pay property management fees,
Mhm.
5%, right? Yeah, so subtract that. And let's say numbers come down to about 20K per year. We're gonna have to divide that by the cap rate, and it depends on the market and where the property is at. Let's say if we use a very, very good market and 5% cap rate over 20,000, that's gonna bring you to, is it 100K? Or let me see real quick. Divided by 5%, 400K,
400,000
400,000.
just
Yes.
by raising the rents $20 a unit.
Yeah. Yeah.
And that goes to Hip National Bank. Theoretically, right?
Yeah. Yeah. Theoretically. Yep.
Yeah, I mean, multifamily is a really powerful tool. In some of these deals, right, you don't even have to really do any renovations. They're just old landlords, mom and pop owners that haven't raised rent in a long time. And you can give a nice rent bump and really increase the value of the property, theoretically overnight.
Yeah.
Um, right?
Yeah. Yeah.
Yeah, that's amazing. So how do you balance like risk and opportunity when managing such a large portfolio, and like what strategies do you employ to mitigate risk?
Yeah. So first of all, we need to understand the market really well, right? Whether you want to invest in your backyard or somewhere else where people say, hey, let's do Texas, right? You still need to understand which part of Texas,
Hmm.
what drive the growth, if you anticipate growth, right? What drive that? And what type of asset class? Is it a class A, B, or C? You cannot increase too much if you're doing class C or if the property sit in class C neighborhood because people cannot afford it. You're going to run into bad debt risk, right? First, understand that market, make sure you can increase rent as projected, and whether that come from just say increasing it because as you mentioned, the mom and pop seller, they never increased rent before. right? But you gotta estimate how much you can increase by looking at the market comp buildings around your target property. And then after that, after the market, and then you look into like make sure you have a good team, especially the property management team that can make or break your profit.
Yeah, yeah.
Yeah. So, and in the past year, these past few years, insurance has been at a hot topics of like we got insurance increase for like 30%, and in some markets was double or 4 times increase. So, but that was unusual. So hopefully we kind of bake in the growth at like 10% in our underwriting model as opposed to 2%, you
Right.
know. Yeah, so that's kind of things that we can control. Another thing we can control is how to use mortgage interest rate type,
Mm,
fixed versus variable, right? If you use fixed rate now, it's more stable. You know exactly how much you have to pay. But if you use
right.
variable, you might bet on whether to the rate increase or decrease. So that's something you cannot control.
Yeah, and that's kind of been like a gamble over the past, say, people that got into deals, call it 4 years ago, 5 years ago, that underwrote at such a low percentage. I've heard that, people are getting pretty banged up on refinancing that, for instance, rates, are slowly decreasing, but somebody that had to refinance from, say, a 3% agency debt to 6% agency debt in the past few months or the last year, they really are underwater some potentially.
Yeah, the Fed increased rate like 10 times in the past 2 years, and they just decreased it like what, the first time?
Yeah, yeah, yeah,
Yeah,
0.5%. Now,
yeah.
you said that there's different classes of multifamily, A plus, A minus, things of that baby. So like for someone that is just getting their feet wet in multifamily, what's like a good asset class to look at? And why do you think that is?
I would say it depends on your risk appetite
Hmm.
too. If you're, and generally speaking, younger people like to take more risks than older people. Like say even myself, right? I have kids too. So I don't want to take more risks anymore. I want to make sure my investment is safe and I can pass on to my children. Um, so depends on your risk appetite. If it's class A, generally speaking, you can expect the rent or demand to come in more steady than class B and C. Because say the class A properties also attract tenants who have higher income, right? And
Mhm.
those tend to have better responsibility in paying their expense obligations. Yeah. So, and then B class is still pretty much working class professional, might be younger, maybe first jobbers who are
Okay.
entering the job market. They can pay rent, right? Yeah, but not too much. Yeah, and then class C is sometimes might as well include the voucher program, Section 810 and type.
Got it. So like think, B class as in like blue collar workers.
Yeah. Yeah,
Okay.
it can be blue collar. Yeah.
Got it. Okay. That makes sense. Sounds like B class, B plus is like a good place to get started for like the value add.
B would be a good starting point because say in the bad economy, people who live in the A class asset might downgrade to B class. And
Yeah.
then in a good economy, people who live in the C plus class will move up to the B. Yeah.
That's a nice happy medium for
Yeah.
tenant profile.
Oh,
So like, multifamily is definitely not single family. Single family, it's one building, one roof, one tenant, right? Um, and underwriting is pretty easy because it just goes by comps, right? Comparable sales, what that house sold down the street for, etc. But, multifamily is a lot more intense with the underwriting process. There's a lot more expenses. So like what are some common mistakes you see investors make when entering multifamily investments? And how do you avoid these pitfalls?
yeah. One of the most common mistakes I saw is about their business plan on how fast they can renovate the units.
Mhm.
And that's number one, the timing, right? They overestimate how much they can do in a short time. Number two is the amount of capex required by whether renovation or the building itself. And that can come from like missing the due diligence process. So if they don't walk all the units, they don't see the conditions of the units, right? The seller will say, oh, everything, all units are the same. And then they show you the good ones. And then you didn't see the ones that's so bad and need heavy renovations. Yeah. So you estimate that you can increase the rent and with the same cost by looking at the good ones. So that's gonna miss cost management, or you didn't raise enough capital to finance your capex capital expenditure.
Got it. And that's, why having a good rock solid team is pretty important too. You'll have an underwriter like yourself. Somebody might be boots on the ground where they're taking the tours of the
Yeah.
properties, making sure they're getting videos and pictures of every single unit, seeing what the fix up cost is. Okay.
Yeah.
So, as a leader in the private equity space and real estate, how do you um you know, mentor and guide your clients or call it, say, team members in making like financial sound decisions, investors, mentees, mentors, clients.
Yeah, usually I give advice to anyone who's want to invest in real estate investments as a limited partner, or even in private equity business too. Look at the management team first. You want to make sure, and in this investment term, we call the management team general partners. Making sure general partners have background that match the industry. How long have they been doing real estate investments? What kind of experience did they do? Did they face any challenges? How did they overcome the challenges? And
Mm.
the and you have to understand as well that people who do more deals, there are chances that they can make some mistakes, right? Comparing to people who are doing two deals, right? So if you find general partners who have deals that run into issue, have some problems, just ask them, so how did you manage those problems? As opposed to say, I don't want to invest because these general partners fail that deal. Yeah. So
Okay.
let's start from the management team. It's really important. And there's a quote of like, good management team can turn bad deal into good ones, and vice versa.
I think I've heard that before in our
Yeah.
mastermind group.
Yeah.
So for listeners that don't necessarily know what a general partner is and a limited partner, could you tell the audience what they are?
Yeah, so usually general partners are managers of the business. They have active roles to manage the business, manage the real estate investment, work with the property managers, work with contractors, making sure contractors go in to do renovations, work with property manager, make sure property manager find tenants, actively look for tenants, pre-actively list the listing, right? And check all the expenses, validate the invoices and expenses that property managers send to you when they withdraw the money. Limited partners come in by bringing in capital, but remain a passive role. So
Hmm.
limited partners don't have daily active management role. And but you can ask general partners to have meetings, ask questions, how's the properties going. General partners roles also have to report monthly, quarterly, um, to the limited partners about the performance, financial performance, operation performance. Yeah.
So what are you most excited for with Rent Roll Capital? What do you see the future? What are you most excited for? What are some goals that you have?
Yeah. So we did two deals this year by bringing in capitals, I mean investors to invest with us, and I hope that we can do one more deal this year. And then, of course, next year, hopefully there are much more deals to do with market conditions. Like we anticipate to have more sellers selling their properties in the market, and also being able to enter at the good prices. I think ultimately we want to find great deals for our investors.
Yeah, I feel like going into the new year, there may be more distressed sellers that have been pushing the can down the road and like trying to make it work, and then they'll sell to people like you, and you'll
Yeah,
make your investors a bunch of money. And then also hopefully lower interest rates.
yeah,
It's nice that the Fed cut 0.5 the other day. Hopefully we get some cheaper rates, because cheaper rates means more cash flow.
yes, exactly.
For those, looking to start building wealth through real estate, specifically multifamily syndication, and partnering with awesome operators like yourself, what's one piece of advice you would give them?
Yeah, educate yourself. Do a lot of education if this is your first investment. Understand the terms, what is cap rate, right? And what is IRR even. Like understand that so that you know how to compare this investment opportunity to other opportunities that you
Hmm.
have on hands.
So for people that want to connect with you and learn more about Rent Roll Capital, what you're doing in syndication and multifamily, what's the best place for them to go to?
Yeah, I would like to get connect with you on via LinkedIn. I post contents there daily, so you can learn about multifamily or even some kind of entrepreneurship journey that I share on LinkedIn. And I use my personal profile, Chutima Barrios. Yeah, that's the only one, Chutima Barrios on LinkedIn.
Awesome, Chutima. It was a pleasure having you on Philly Fortune Talks. And if you're interested in multifamily syndication, be sure to check her page out on LinkedIn and Rent Roll Capital.
All
Thank
right,
you.
thank you.
Thanks for tuning in to Philly Fortune Talks with Jake Penny. Inspired to share your success story? Visit phillyfortunetalks.com/guest and let's inspire together.